We're going to move on to our calls of the day. B of A is bullish on Goldman Sachs. They reiterated a buy rating with a $700 price target. A lot of bank ownership here on the desk. Joe, I'm just going to start with you. I mean, what do you make of this call?
I've had ownership of Goldman Sachs for the better part of the last 4.5 years. David Solomon has done a remarkable job in just really navigating a significant turn in the business, moving away from some of the consumer-facing businesses that they attempted to move towards, going back to what ultimately is their knitting as it relates to investment banking and trading, and doing it remarkably well. I think it's restored that reputation. I often use the example Goldman Sachs is likened to the New York Yankees in baseball. They have that very strong tradition and reputation, and I see no reason why I'm going to be selling this position anytime soon.
All right, Snap, you own Goldman as well. By the way, coming off some comments from Jamie Dimon, obviously from J.P. Morgan. I don't know if they're the Red Sox or the Mets. I don't know what they are in that analogy. But worried about the economy slowing down. Is that something that you're worried about impacting Goldman? If Jamie Dimon's right, of course.
I mean, I think as it relates to Goldman, I think a couple of things. I mean, Joe just mentioned getting out of the consumer basis was big. They cut that loss. I think that was super important. As it relates to kind of the economy, yes, of course. I mean, as a broad take, I mean that would hurt all the banks. But you know, they are right in that IB space, which I think they're the best of breed there. Trading revenue has done phenomenal, particularly in the first quarter. You saw that really seismic shift there. Revenue was up 6%. The stock is up 9%. And again, as comments earlier I made, you know, just thinking about the M&A cycle to start potentially later this year or early 2026, I think is a catalyst for the stock.
I know you own it too,
yeah,
right?
I do. And I was at they have a family office conference each year for just the top clients. Can I tell you, you get a chance to meet the people. I know a lot of them. I agree with what Joe says about David Solomon, but I'll tell you that, and I mean this, and I'm trying to think if I'm wrong as I'm saying it. I haven't met a person at Goldman Sachs on any of their business lines that I'd say, you know, they made a mistake hiring this person. So the bench is extremely deep. What's amazing is the average age of the firm is sub 30. So there's a lot of growth there. It's a really, really deep bench, and they are poised. There will be an underwriting cycle. There will be an M&A cycle. And for them, they're the purest play on that. So they will do exceptionally well.
Shannon, any general thoughts just about the financial space right now with the idea that those Fed cuts may be pushed out a little longer than we previously expected?
Well, I mean, I think there were a lot of people coming into this year who were very excited about this M&A story, and so I feel like that's obviously going to be delayed. I do think that, again, to my point earlier, I think, you know, if you think about the deregulatory impact and the lack of enforcement versus actual true deregulation, I think that you get a much more market tailwind, and so even in areas such as digital assets, for instance, you're seeing a tailwind in multiple parts of the financial sector.